You're watching Famous Dave on YouTube.
All right, and we're coming into a fairly typical day here with pretty much unchanged. Looks like the Nasdaq's down slightly, E-minis up slightly. We've given back a little bit since earlier this morning. Anyways, I just want to go quickly through the position. I was talking yesterday about putting on a UVXY, slightly more risky position. Just to take a look here, we have essentially $11,000 in buying power here. And let me see if I can kind of put this more in the frame. So right behind my head there, we have about $11,000 in buying power, of which at this point we're using all but $500. And most of that is on our UVXY position. There's about $500 or $600 on the YOLO position. But and what I've done is I've kind of divided this buying power among selling various options. I've sold some out of the money calls, and I've split them among various expiration times. So if we look here, so we've got, let's see. So let's go out to June 19th. We have here, and on my Thinkorswim, I've got various customized screens here of looking at things. This one called Dave 1, it's going to show my positions on the screen in each option. But so for example here, we are short one June 41 call. We were talking about that yesterday, which I sold for $3. And then to the downside, we're short one June 27 put. So the call farther out of the money than the put here. And if we go out to July, similar situation, short this way out of the money call, this 195 call. I'm sorry, 95 call, and then short once again the 20 put to the downside with 50 days to go. And then in the June 26 expiration, short 2 of the 60 calls, 1 of the 95 calls, and then short 1 of these puts down here to the downside. And then if we go to the closest thing that's kind of might cause us some problems here is I am short 1 of these put spreads expiring in a couple days, the 32.29 put spread. And actually, if we do go to an Analyze tab, we can see that our delta is very flat right here. It's showing at 0.01 delta, short 16 gamma, and then it's showing here theta of 18 cents. And the reason why it's not showing any theta is because we got really good marks yesterday. So for example, yesterday it showed us making $179 on the position, which was like good mark. So if we were to actually move the date forward, it was actually on the wrong date already. It was on yesterday. But if we start to move this date forward, you're going to see the theta really picking up here. And so what we're looking at today is this front week. I did sell this one lot put spread, and let me show you that once more. It's this the May 32.28 put spread, and so we want to keep an eye on that as we roll lower here, because that's helping us flatten out our deltas, but at the same time, if we roll through it. Now I sold this for, I believe, 91 cents, so it's a $3 put spread. Sold it for around 1/3 of its possible value. So, we're trying to collect $100 here, but if we roll down to 29 in the next day or two, we'll end up losing 200 instead of collecting 100. So kind of keeping an eye on that. However, any of these puts that we sell to the downside are kind of they're going to give us room for this position to kind of move back and forth. If it moves up a little bit, we're not going to take as much loss because we've got this stuff sold to the downside. So pretty much when you're selling, we're selling strangles at various positions here. And initially I had a short delta on this position, but it's pretty flat as far as deltas. Actually, it's very flat as far as deltas right right now. So that's kind of where we are there. Let's take a look at this YOLO position, because I think most of you would probably agree that this is a pretty aggressive position to put on last night. You know, a lot of the MJ stocks have been gapping up, moving all over the place. Tilray made like a 20% up move recently. ACB has made about a 50% up move. And it's certainly possible that these things can kind of come back down. But in the meantime, I've bought very far out options. In fact, as far out options as you can possibly buy in YOLO for relatively cheap. You know, I paid 80 cents for some of these out of the money calls. And thus, it's kind of like a long-term thing. So we certainly could get a pullback. In which case, if we do, we might just hang out here and see what kind of happens. If we look at the YOLO position here, we are, once again, I always go back to my Analyze tab here and pull up price slices to kind of check out the Greeks of the position here. So look at the Greeks of the position and long 179 delta. So what that means is, like, each dollar goes up, we're going to make $179. Each dollar goes down, we're going to lose $179. And you can see as we move higher, the delta increases. Now that makes a lot of sense because this position is all about these November 14 calls. So, and so kind of the plan moving forward is to kind of just ride these higher as this moves higher. We don't really want to sell stock against it or sell YOLO against this, because YOLO is very hard to borrow and we're not probably going to have shares available to sell. However, what the plan would be with this would be to go to the options screen and sell some other sort of options eventually against this if it kind of moves our way. And we've talked about how this stuff is really cheap, so I don't really want to give away my potential too aggressively by selling stuff. Once again, we're long the 14 strike and the 13 strike. Just, you know, a 5 lot and a 1 lot here. But if this were to roll higher, we might consider selling maybe like the 15 or 16 strike in another month against it. That way, financing the position. It would be nice if we could, you know, have this position on for free and finance it. The other idea with this is, if we do roll higher, would be to, as the value of these calls goes higher, would be to buy some puts to complete having a strangle on for good prices, to lock in good prices in a strangle. So for example, if we were to roll up in November, I'm looking kind of at this November 12 put here. If this were to get, if we rolled up higher, these puts may come down to like, you know, $1.50 or something, and we could lock in this strangle for advantageous prices, because the whole kind of supposition with this trade is that this stuff is relatively cheap way out here in time. If we look at our Greeks once again, this position is costing $2 a day. So really the clock is not really ticking on us. We can hang out and it can move lower and then come back up again. The supposition with this position is just that the MJ industry is going to come back at some point and has bottomed and is going to continue to move higher. So if that's the case, this is a very it's kind of like a leveraged way of getting along this that doesn't provide us with a lot of decay per day. Once again, like $2 a day, you know, $500-$600 maximum in this position right around now. And you know, kind of my plan is if it goes my way, then kind of build on it. If it doesn't go my way, then kind of just don't add to losses. So we'll see how that works. Let's take a look at the general market. Hey, what's up, Spencer? Let's take a look just at the watching TGOD and VRNDF. Maybe we'll check those out in a second. Let's take a look at the general market conditions and at the term structure. You know, term structure looking very normal now as we are back in contango, and it looking like we might stay there for a while. Here we go with the term structure. showing contango of 3%. There's some good getting to be more and more separation between the futures and spot, where we've got almost $2 between the front month and spot VIX, and that's pretty healthy. That's pretty much the widest we've seen it in some time, since I'd say since the spike. So really getting back to normal here, and this nice healthy distance between the futures and spot, combined with the fact that these two are going into contango with each other, that's going to provide more and more advantageous conditions for this stuff to really start decaying, and us to see, like, even if the VIX were to stay around this level, we don't even need it to go through, let's say, a 25 or a 20 for these products to really start moving lower. And I would anticipate even if conditions stay like this, we will see TVIX break through that $100 level pretty shortly, I would say. TVIX currently 139 as I come to you now, but we're seeing really everything kind of line up here, and the market acting very healthy right now. Once again, it doesn't totally jive with the scenario on the ground in the U.S. as far as, like, everybody wants to believe that this coronavirus thing is over and that we're moving on. It seems like the federal government, and that being the president and whatnot, really focused on the election ahead, and the strategy going forward is like the federal government is going to act like this is completely over no matter what, because I think that they've made the political calculation that gives them the best chances for the election ahead. And I know that's kind of a skeptical viewpoint to think that, like, that's the only calculation here, but really there's not a whole lot of evidence to show that that's not what's going on. People just sick of sitting at home and wanting to get back to work and whatnot. So, but there's a lot of evidence out there, just data-wise, that this epidemic is not over, that there's problems moving ahead. So this optimism in the market, I don't think it's destined to continue forever. So keep that in the back of your head. I don't think anybody would be surprised if we have a pullback here at some point. So don't let it catch you off guard. I wouldn't be like all in long this market here. Is just my take on things as we move forward here. Meanwhile, we've seen this controversy with Twitter and tweeting and all this stuff, and some pretty good discussions. I was watching Joe Rogan. Joe Rogan, huge in the news now with his $100 million deal with Spotify, and a lot of conversation about what we should be doing, what if it makes sense to stay with stuff closed down. A lot of anger over we were too extreme with this stuff, and the market just really showing a lot of strength here. So try to divorce yourself from the politics of things and just trade the numbers. And numbers are just saying that the market seems pretty strong here. Vol seems to be coming in. And if you take a look really at the chart of the NASDAQ here, it makes sense why vol would be coming in. Look at this NASDAQ chart here. I mean, it has just come back almost all the way. And so you would expect volatility to come in almost all the way. Let me show you this chart here. Right, so why am I at yellow? Hold on 1 second. NQ. So we see, look, here is the height of the virus scare and everything, and we've come back all the way. So it makes sense that volatility would come back all the way. Let's see if we can chart the VIX on top of this here real quick. So I'm going to go add study, compare with custom symbol, and we'll type VIX. And kind of making sense here. We see as the height of the sell-off, VIX spiking, and then as we rally back, the VIX coming back down. We're not all the way down, although NASDAQ is almost all the way back. We're not all the way down. Why is that? Well, easy answer to that. The VIX is not based on the NASDAQ. It's based on the S&P. And if we look at actually the E-minis here as a proxy for the S&P, we can see E-minis not nearly as close to taking out the highs as the NASDAQ was. And really, you can see almost a perfect inverse relationship between the E-minis and the VIX in purple here. So really, as has always been the case, so as the S&P goes, the VIX goes inversely. And so kind of everything kind of makes sense and lines up as far as this is all concerned. And you can see it right there. So no real shockers here. And that's kind of where we are right now. A lot of, as I said, as you think back through your trading in this particular last like 6 months or something, I think the takeaways is that, well, one of the takeaways at least is people were very, as we sold off here, people were very bearish. I'd say about half the way back up here behind me, people were very, very bearish, and a lot of people missed this rally here because they were just not engaged in buying down here. In fact, they were bearish. You know, it's like people get on this idea that we're going lower and they can't get out of it. They get stuck in this idea that we're going lower. And so a lot of these rips were people, you know, covering their shorts and trying to get back in. And so it was a debacle for a lot of people. So the takeaway is to keep that under your hat for the next sell-off we have, that a sell-off in almost all times, even when we have an extreme situation like we did there, is an opportunity to buy stuff. And, you know, the buy the dip, it seems like it almost always works, and you have to keep that in mind, and not be short when we turn around at a very limit. And so there kind of we are. The question in everybody's mind is, where do we go from here, of course, which is always the question. And I don't have the answer for that for you. But I think that by kind of seeing and recognizing where we are right now and what's going on is a step in the right direction. And where we are is almost at the highs in the NASDAQ here. Let's go back to the NASDAQ again. And I know a lot of people cover individual stocks and individual setups, but this kind of like overall looking at the market is really important if you're trading a product like the VIX. And we can see, okay, so the high here, 96.18 something. We're very close to taking out the highs in the NASDAQ. And I think, you know, there's the potential that we rip higher as soon as we hit that high, right? But it's still, if you're trying to like quote unquote make sense of the market, it doesn't make sense in a certain way, but trying to make sense of the market has always been a futile task. And don't think that all of a sudden somehow it changes. The conditions on the ground don't change the fact that we don't know what the market's going to do at any given time. That seems to be a big takeaway here. So yeah, so this is a little different way to be trading fixed products, is to, a lot of the trades that I have on, because it's selling naked calls, they require a lot of capital. So even though we're using up the maximum amount of capital here, pretty much, we have a less extreme position in many ways than if we were just, say, taking all this capital and just putting it in a one big put spread to short. That would have a bigger delta associated with it, thus a more risk for a directional move than this does. It seems risky because if we had a huge spike, it could be more damaging than having just a limited risk position. But it also has a higher, essentially, it's a different kind of risk, really. There's a higher chance of success with this particular position for a smaller amount of money, and and it also there's a slight chance of catastrophic loss, which we didn't have with the other positions. So it's a little different kind of risk. We'll continue to monitor this and see how it goes. It looks like we made about around $180 yesterday on the position here, which is a good first day on it, I think. Especially since the Greeks showed that that we were collecting $50 a day. We collected more than $50 a day yesterday, so maybe we kind of got in at a nice point in time, and VIX came in on top of just average daily decay, and so that was a nice little start to the position. But I would suspect we also just got good marks. So we'll monitor this position moving forward and see how it does. It's the fun thing about watching someone actually trading something is you can actually see how it really does in real time. So we'll continue to do that. What's up? Let's see. Joe Rogan is the new mainstream. His audience competes with the major media companies at this point. Yeah, and I've been a Joe Rogan fan for a while. It kind of was like back in the 90s, we used to watch Howard Stern in the morning when we were working. I was painting over the winter a couple times in the last couple years, and we would listen to Joe Rogan podcasts. And certainly people get their news. People don't watch, the Fox Newses and the MSNBCs would like to keep telling everybody that like everybody watches these to get their news, but I think that's kind of like the older generation watches these cable news things, whereas the younger generation and even just kind of like the normal people, many people get their news from like YouTube or other online sources. People watch like Philip DeFranco or I think sometimes, the sources where most of us get our news, we think, well, that's not what the major public does. The major public watches like NBC Nightly News. But in fact, I think most people now get their news from social media and in the various ways. And Joe Rogan's gone really mainstream at this point, but his content is more like men's health type stuff, and it's hard for me to tell, because I watch it all the time, so it's hard for me to tell if other people are watching it or not. But certainly millions of people checking out Joe Rogan every day. And, a lot of it is just like him talking to another comedian. Of course, you get, the segments with Eddie Bravo, where Eddie Bravo is spewing conspiracy theories all over the place. But I think one of the things that's really positive about Joe Rogan, as far as I'm concerned, is that he has a platform where you can have diverse viewpoints. You can have people from both sides of the political aisle come on and discuss stuff, and I think that's very healthy because so many of us are just watching. We're seeking out whatever viewpoint we agree with and only watching that part of the news, and that's not good. I think it's good to expose yourself to a diverse range of viewpoints, and I think that Joe Rogan allows people to do that a little bit more than some of the other news outlets, which is a healthy thing. And what else do we have from Spencer? So VIX futures are rising towards Nova, as you mentioned yesterday. Yeah, I mean, obviously the election's a very big deal. I saw some articles saying that, like, well, last year the term structure wasn't like that. It's like, well, yeah, because last year there wasn't a huge presidential election coming. Obviously 2016 was a shock. People didn't expect that President Trump would win, and it was really crazy trading that day of the election. I have one friend that made a bunch of money that night, but certainly I don't think people want to get caught off guard this time. So that's why everything's kind of pumped up. I'm going to make the call early that it's going to be more of a non-event this time, and that because people are all pumped to that it's going to be this huge vol event, it probably won't be. Usually huge vol events happen when people aren't expecting them, not when they are. Good morning, Jason Wu. Thanks everybody for watching. So kind of have to see, wait and see what happens, but I think that that whole thing in the curve is kind of overly pronounced. And once again, when we're looking at VIX futures farther out in time, there's not a lot trading out there. So it doesn't mean all that much. So I don't, I know when you look at the chart, it's like, well, that's what you see when you look at the chart is out there. That's not really affecting us very much here in the term structure as far as our products go, because it's only the front 2 months that actually affect the product. So yeah, you can see it out there, and maybe when it's between September and October, it will mean higher contango, but certainly that relationship between October and November won't stay that way forever. Just mechanically speaking, as we get closer, it won't stay that way. But hey, what's up, Marcella? Thanks for watching. Thanks for watching that interview and putting the comments underneath it on the Greg Gossett thing. That was great. It was great to see all people from the channel go over and leave comments on Greg's page. Thank you very much. I hope things are going okay down south in your part of the world. And best of luck to everybody else who's watching today. Excited to make a little money here. We need to make a little money here, folks. Let's profit here. I want to hear people making money, because that's what we're here for. And let's get some people that have watched this channel and become independently wealthy and don't have to do any other job because they've made money trading. That's what I'd like to hear. So I will be watching the markets as we move forward today, and I expect you will be too. Thanks for watching, and I'll see you next time on the Short Vol Show Live.
You're watching Famous Days.